Well, thanks for staying with us on Business Nigeria. Amid the federal government's investment drive, Nigeria's capital importation maintained good stead at $2.6 billion in the second quarter of the year 2024, thereby portraying a robust increase of more than 152% year on year compared to $1.03 billion in the second quarter of the year 2023. And this is according to a new report by the National Bureau of Statistics in its latest capital importation report in Abuja. The National Bureau office said in terms of sector ranking, the banking sector recorded the highest inflow with $1.1 billion, representing 43.15% of total capital imported in the period, closely followed by the production and manufacturing sector at $624 million, representing 23.99%, and trading sector standing at $569 million, representing 21%. An industrial sector analyst, Chapel Hill Denman, Mr. James Oladisa, is joining us to help us understand really why we have that increase. Thank you so much for joining us on Business Nigeria.
Thank you very much for having me.
All right, Nigeria's capital importation reached $2.6 billion in the second quarter of the year 2024. And people have seen this as a robust increase year on year compared to 1.03 in the year 2023. What do you make of these figures?
So, like you rightly said, we saw capital importation, total capital importation increased by about 2.5 times $2.6 billion. And if we look at the contribution of this capital that is imported into the country, we see that it mostly came from money market instruments as well as loans, foreign loans into the country. And that's what drove the increase that we're seeing in capital importation in Q2 2024. But if we look at it on a quarterly basis, we see that there was actually a decline. There was a 73% decline, 75% decline in foreign direct investment to about $29 billion. About $29 million, and that's around the lowest that we've seen so far in the past 10 years. In terms of foreign portfolio investments, there was a 13.1 times expansion that we saw in the figure. And we also saw a decline of about 47% in terms of, 1% in terms of other investments. And I think that these figures are quite instructive because when we look at foreign direct investment and the significant decline, it sort of underscores the challenges that we face in Nigeria, which sort of keep foreign investors away from our market. But in terms of assets, looking at foreign portfolio investments, we still see some inflows coming to our country, and it speaks to the pricing of some of the assets that we see on the fixed income side of things, also on the equity side of things, which have attracted investors into our domestic market. So we believe that it's a positive development, foreign capital. If we look at the trend between net inflows in the NAFEM window and we look at foreign portfolio investment, we see that it accounts for about 33%. And it means that if foreign portfolio investment improve, we would see liquidity improve in the NAFEM window, and that would also translate to possibly a stronger currency. So we like the fact that we've seen it improve on a year-on-year basis in such a significant leap, with such a significant leap.
Well, you look at the ongoing reforms and impact on economic development. Well, inflation is, of course, chasing the roof now. An increase in rates is not helping the situation. Really, what next?
Well, the central bank governor has made it known that we cannot fight poverty with inflation at certain levels. And so we're beginning to see them being very, very contractionary and very, very hawkish. And so we think that, they will continue to do this for as long as inflation remains runaway. And we would also expect that, development or economic growth will be sort of limited while we go through this phase of, heightened interest rates.
But do you think investors really are willing to put funds into the Nigerian economy? How attractive is the Nigerian market at this time?
Well, you can look at it from two perspectives. The first would be look at domestic investors. The reality is that if we have to see any economic development, but see a deepening of our capital markets, that would be driven by domestic investors. But from a foreign investor's perspective, there are three main factors that we see as roadblocks that keep them cautiously optimistic concerning this market. First of all, is the fact that the foreign exchange is quite volatile, and we've seen some of these foreign investors, invest heavily in Nigeria, and in order to repatriate their dividends, they're having, a hard time, and that has, in turn, translated to apathy towards the Nigerian market, and so we see this as a second roadblock. The third is that, we're seeing some of these manufacturing or consumer goods companies. We've seen, foreign investment into Nigeria to build some of the fast-moving consumer good companies that we're seeing in the country, some of them that have been here for a very long time. And because of the devaluation of the currency, the loans that have been given to these subsidiaries, they're not able to meet all their obligations. And so we're beginning to see that these businesses are converting these loans into equity. If they had other options, they might have explored it. So these are some of the reasons why we think that, the foreign investors, or from the perspective of a foreign investor, the Nigerian market is positive if you're looking at it from a long-term view, but they are also remaining cautious, in coming in the market.
Oh, of course, both local and international businesses are talking about sustainability at this time, really. But what should they be looking out for? Since we've seen increase in manufacturing sector, in the banking sector, and even in the trading sector.
Yeah, so I think, if you're looking at Nigeria as this place, your view cannot be short term. You have to look at the long-term opportunity in the country. And, if investors begin to look at the country from that perspective, from a long-term perspective, they will begin to see the opportunities in the country. So we believe that, Nigeria over a long term, we're beginning to turn the corner. Presidential speech, as the president mentioned, there is light at the end of the tunnel. And so, if we're taking hard decisions to sort of put our economy on track, the reality is that it will not immediately translate to growth for some of these companies. But over the long term, when these policies begin to have their full effect on the economy, we will then begin to see an improvement in, the operations of the manufacturing companies, and the banking sector will begin to see growth. Even in trade, we'll begin to see growth.
Thank you so much, Industrial Sector Analyst, Chapel Hill Denham, Mr. James Oladisa. Thank you so much for speaking with us and telling us that it's not all gloom in the market. Thank you so much for sharing your thoughts on Business Nigeria.